Welcome back to another video. Today we're going to be looking at Daye's quarterly theory with 90-minute cycles. So I've got 1, 2, 3, 4 90-minute cycles. This delineates one session in the day. So it's from midnight New York time to 6 a.m. New York time. This was 17th of November 2023. So Q1, mark out areas of liquidity. Firstly, you don't want to ever be trading Q1 if you're trading. Let's do this. Mark out through open. So we've got sell side liquidity, buy side liquidity of Q1. We've got through open in Q2, and now how we use through open is we want to buy below through open and sell above through open during Q3 and the later half of Q2. So we've got run lower, see lows are being taken and highs are being taken, swing highs are taken, swing lows are taken, another swing low is taken, and then that swing high is taken. So this is the area of consolidation. Both sides of the marketplace is being taken. Now you have a run down, bigger run down. This is all in the 5-minute chart. And now as soon as there's this fair value gap, this becomes an order block after the high is taken. So right here, just attach it properly. Order block. Minute. Last down candle before the up move. This took liquidity. So if, for your notes, this is quite important. Whenever liquidity is taken, you get two types of liquidity: internal range liquidity, external range liquidity. Now this here, in terms of this range, from this high down to this low, or even from this high down to this low, this is now outside that range. So that's external range liquidity in terms of this swing, this price swing. So whenever external range liquidity is taken, you look and see where the next inside of the next swing that's made. So this swing here that took the external range liquidity, where is the area of internal range liquidity that it could refer to? So right here is a fair value gap, order block, and that's the area that it could refer to. And from internal range it will move out to external range. This is also depending on order flow and market conditions, like market news, market drivers. So I'll just mark this out. So this area will be sensitive just because it took external range liquidity. And you see how sensitive it is there. Get this down candle, but it only goes down into this order block because it's taken external range liquidity, goes back, takes internal range liquidity, and now goes back in, takes external range liquidity again in terms of these highs, and then comes back to internal range liquidity with this order block. And you'll see in terms of the swings, it's all referred to back to true open. So I wouldn't look at this as grabbing internal range liquidity because they're selling below true open for the session, and usually they'll be buying below true open. So I'll look at this as a false run quickly, just to close this fair value gap or this gap that would have been created if that red candle wasn't there, and then taking external range liquidity. And it comes back internal range liquidity in terms of this order block, and now we are hitting Q3, which is our distribution phase. And you see price just runs away. So in terms of entry, we see the fair value gap, another fair value gap. This now gets qualified after this candle closes above the high, and there's a fair value gap in this leg up. So once it goes back down, there you could have an entry. Here you could have an entry, here you could have an entry. So 3 points where you could have entered. I'll just put on the first one. Target below the, or stop below the lows. Long position. Stop below the lows. And now see this run and stops here. This will be looked at as a breaker. Run and stop, and then it shouldn't go back below this level. It's a run and stop into, see how we came from external range liquidity in terms of this. Now this is the new swing. Just remove this, close that. This is now the new internal range liquidity. That could be a target. And I say it could be a target because everything is time based. It's not based on price. So this price is important at this time. This price is important at this time, at this time, and at this time. It's not the time that's important to the price, it's the price that's important. It's not the, sorry, let me say that again. It's not the price that's important to the time, it's the time that's important to the price. So time affects price, but price has no effect on time. So this area is now sensitive. We are in Q3. We want to buy below true open. So anywhere in this order block, there, or there you could be buying. But you see how it pushes deeper in to this fair value gap. I'm just gonna mark this 5-minute fair value gap high. Five-minute fair value gap low. And you see how this fair value gap that's made here gets filled and violated, making this now an order block. In terms of entry and targeting, so this low, so this low takes out this low. So in terms of targeting, you put your foot this, all the way up to the swing high. Target 1, 2, 2.5 and 4 standard deviations. So you have 4 target areas. Based on what you're doing, the strategy you're using, you want to see that 1, 2, so it gets 2 standard deviations. I'm not looking at 3 at all, and then I'm looking at 4 as a final target. Gets 1 standard deviation, 2 standard deviations, and then 4 would be my ultimate target, just because that's a breaker. So if I'm taking a long position here, stop below the low, it's already taken liquidity, so it has quote unquote no reason to go back, and then target would be 2 standard deviations. That's a 1 to 3.8, you can say 1 to 4 if you entered in the fair value gap itself. 1 to 4, even at the top. Now we'll go down to a 1 minute time frame and we'll see what it looks like. So inside the 1 minute is the fair value gap. Within this 5 minute fair value gap, here to here, fair value gap high and low, you can stretch that all the way across, and you see how it gets there, touches it and just explodes off. And if you guys notice the time that I'm using, it's also in the same time as the silver bullet hour. And if you want to make it even more accurate, you could use this high of the 1 minute, or this low of the 1 minute, sorry, swing low up to the swing high. And now target 2R, it's about the same, and 1 to 4.1. Simple as that. Buy below true open, sell above true open. By following this one rule, you will have amazing results in your trading. It's boring, but it's worth it. If you guys enjoyed the video, like, comment and subscribe. Cheers.